Let's just talk about a couple of sectors now, and two sectors is what we're going to focus on with an expert. One is the consumer durables space, the other is the industrials space. What exactly should you be doing if you track these sectors or are interested in buying stocks in these two sectors? Amit Mahawar, research analyst at Edelweiss, is now joining us on the show to talk to us about this. Amit, thank you very much for joining us. Great to have you here on CNBC TV18. So, what's the prognosis? Let's start with consumer durables, Amit. I mean, everything is at a standstill. It's basically about conserving capital. But how does one go about differentiating between various companies and assessing their prospects for when we come out of this lockdown period?
Hi. I think, one thing is quite obvious that as focus shifts from growth to survival, most of the discretionary spend will take a hit and that will take time. Because mind you, unlike the past disruptions, where things, came back pretty quickly, this time it's happened at a time where already discretionary spending was challenged. So I think what will happen is segments which are more exposed to new construction, especially residential construction, that will have a much prolonged pain versus something like in the cooling product range, which maybe this season might be a bad time, but I think beyond that looks good, because what's going to happen is your maybe demand around switches, switchgear, cables and wire. I think that will take much long time. That was anyways, if you see the volume growth in last one and a half year has been weak. I think that will take much longer time, and focus should be on the companies here which are basically having a resilient business model, and which has a significant scalability in the next 2 to 3 years, and which can withstand the test of time. Like next couple of quarters are clearly going to be much weaker. In fact, we are basically expecting that FY21 growth rate across segments will be either down or maybe flattish, barring say a cooling segment where things are more need based. I think that's our view broadly on the segments.
Okay, Amit, in terms of your estimates, earnings estimates, have you penciled in the impact, or this is still very, very fluid?
So I think last 1 month it has been a great challenge, understanding how will the numbers pan out, because things are evolving, and still most companies are not able to issue any guidance, right? But one thing is quite obvious that FY21, especially maybe starting from Q1, you will have a major impact. Q4, I think at least till 15th of March, things were pretty stable. But I think in the last 2 weeks, most companies will reflect that impact. So largely FY21 earnings, I would say, will be challenged. So we've trimmed down our estimates, in the range of maybe 10% to 20-25% across coverage for 21. And I think we are now expecting a much lower numbers for 21. And the sharper impact, of course, is basically on segments which are more real estate heavy, new construction heavy. So we've done our estimate trimming in last 2 weeks.
Are there areas now, Amit, where you find absolute great upsides in that space, consumer durables? We'll get to industrials in just a bit.
I think consumer durable, one thing is there that in terms of valuations, we've not seen great correction. I think large part is still reflective that valuations are still going to be a challenge in this segment, and hence one must carefully navigate around segments or stocks which, as I said, will be resilient and can have a significant scale. So we are more preferring something like a Voltas or an Amber Enterprises, where we think from the next 2 to 3 year perspective, the business models are robust. They are getting the benefit of favorable trend in the sector, and we are largely avoiding most of the other companies, including those which are more real estate heavy. So I would say that that's the way Voltas, from a next 2 to 3 year perspective, will have a sustained leadership in room ACs. They are trying to make inroads in the largest segment that we have in India, that is refrigerator. So as I said, beyond this cooling season, which largely is going to be poor, like April is gone, right? April largely, nobody will be able to sell anything. It's only in May that we can judge how does the cooling, or other revenues pick up. But maybe people should look beyond that, because it's quite obvious and reflecting in stocks that the near-term earnings is in deep pain. So I think from a 1 to 2 year scalability point of view, we are preferring Amber and Voltas.
Okay, Amber and Voltas are the picks at Edelweiss. Meanwhile, you're seeing important flashes on your screen. These are sources that are indicating how things might go from here on. MHA sources, Home Affairs Ministry sources, and we'll try and get you some more color on this, because the question is that if an area is designated as a hotspot and then there are containment zones within that area, what will be open, what won't be open. So these are issues that one has to navigate as we go forward. But Amit, I want to get your take on industrials. I was reading a report this morning. For instance, it's phenomenal. In Hyderabad, they're going all out and building roads because the traffic is off. So there's a lot of road construction in a city like Hyderabad, which is underway even as we speak. We also got to know that some of these services, like construction, for instance, might be allowed to open at least partially. How would you look at EPC players, contracting players? And what's the specific call on L&T, which has already moved from 700 odd lows to about 900 now?
I think, again, one more segment where things will be tough is industrials, where, at least next couple of months, focus will be on saving lives, healthcare, and, building in normalcy will take more time. But I think how we are navigating here and, indicating is that you will have companies which across cycles, if you see the last 3 big GDP disruptions in last 15-18 years, we've always seen a very strong comeback, in industrials, which is led by the leading players. Like you have L&T, Siemens, ABB. These kind of companies have always come back very sharply. I think we are following, an approach here where we believe companies which are more sustainable beyond cycles, which have exhibited quite a bit of revenue diversification, which have fungible resource structure, be it plants or teams, which have adapted to changing business trends and have a very leaner fixed cost structure, I think will be the one which will be able to survive. I think near term, it's pretty evident that next 1 or 2 quarters, you will have a very significant impact as players try to, support their vendor base. Most companies are looking at supporting the vendor base. They have large, pool of construction labor. I think we have to see beyond that, and I think if you take a 1 or 2 year view, I think Larsen and Toubro versus the last, GFC cycle looks pretty attractive. Their balance sheet is strong. They've had a couple of, concerns around subsidiaries, but I think the stock got hammered way beyond that. And at least in our model industrial portfolio, we have L&T, Siemens, something like a Bharat Electronics as our top picks. These are companies which are more resilient. They have a very high degree of fungibility, very well exhibited. And we are avoiding companies with a very heavy fixed cost structure or which have a rigid business model. So I would say one should look beyond the current scheme of things, which is quite obvious and known, and a lot of that is reflecting in stock prices. But we should maybe focus on companies which are more innovative, which are nimble and agile. So I think companies like Siemens, companies like Larsen and Toubro, Bharat Electronics, these are companies which I think looks promising to us.
L&T, BEL, and which one, Amit?
Siemens.
Okay, BEL, L&T, and Siemens are the 3 which you think will are your top picks, right? And in the consumer durables area, you said Amber and Voltas now. I think
these 5 companies, if you actually see, a couple of them are pretty new, like Amber is a recent name. But I would say all these companies have a pretty significant scale that they can achieve. Their business model and competitive framework is pretty robust. More importantly, we always prefer the market leaders, right? in tough times, they always consolidate. So I would say even in a segment like EPC, which is sort of low end, if I can use the word, L&T is focusing on pretty significant contracts. If you see in last 1 week alone, they have announced contracts worth almost around $3 billion and might exit FY20 with maybe flattish to a marginal growth in the current times also. So I would say, these kind of entities are already, proved their mettle in last 15-20 years of down cycles.
Okay. Just a quick word, I mean, some specifics. What about names like Havells, Polycab, etc., Amit?
I think so. Again, these are pretty strong leaders in their own scheme of things. I mean, Havells is the largest listed consumer electrical company in India, and Polycab is the number one cable and wire company, which is also trying to make inroads into the other electronic items. But I think these are also largely exposed to new construction, right? I think to that extent, they will take, I think FY21 is going to be a period of very low growth. They will focus on, in my view, cutting down the discretionary spend. They will look at their A&P spend because this year is not the time where you can spend, aggressively. So I think they will look at their P&L. There will be cost challenges. The distribution chain is right now under stress, right? If you see the receivables and inventory position, that's quite high. So I think these will take time, but maybe you wait for opportune time. But these are robust business models, I must say, where it's not easy to replicate. I mean, if you see Havells and Polycab, both of them in last 5 years have significantly scaled up their market share across key segments.
Oh, absolutely. Got it. We'll leave it there. Amit, thank you very much for running us through what you make of, both those important segments, consumer durables, where you were saying that two names, Amber Enterprises and Voltas are your top picks, and in industrials, consumer industrials, which is the other space that you track, you've got three top ideas: BEL, L&T, and Siemens. So 5 picks from Amit at a time like this to sort of play on upsides as we get to some sort of normalcy in the next couple of weeks and months. So that's a quick discussion coming through on what to do in specific areas as far as the market is concerned. I mean, we got 46 points on the Nifty. If we can have that up, 8974 is where the Nifty is at, and it's at the day's high as we speak. The Nifty Bank is up a full 1%. 19,230, that I think is also at the day's high. Yes, I mean, so it's pushing higher as we speak, and this is what I was talking about exactly on the top of the show. There was a 2-point change down on the Nifty when we started at 11, and I was saying that this is a pivotal kind of point where from this point either the market heads lower or surges up once again to that 38% retracement and probably even higher. So it's an important day in that sense, as was yesterday as well. We will take a very quick break here.